Every market I ever traded, stocks, commodities, cotton, grain, had its own personality, but the one law that governed them all never changed. Price prefers the path of least resistance. Most traders don't fail because they lack intelligence or indicators. They fail because they fight the natural direction of the market. They want to feel right instead of being right. They want to predict instead of observe. They want control where no man has ever held control. If there is one lesson that cost me fortunes before it made me fortunes, it is this: the market moves where it wants to move. My job was never to tell it what to do. My job was to listen, observe, and understand where the pressure was building, where the resistance weakened, where demand quietly crept in, where supply whispered its warnings. Those whispers became shouts for those who paid attention. Most modern traders think they need complicated systems, 20 indicators, and a dashboard that looks like a train control panel. But the market today is no different than the market of my time. Technology changes, but human nature doesn't. We're dealing with fear, greed, hope, impatience, and overconfidence, the same emotions I saw a century ago, wearing the same face, making the same mistakes. That's why the line of least resistance matters. It's the closest thing to predicting the market that you'll ever get, because it's not prediction, it's permission. The market is giving you clues, and if you're disciplined enough, you can learn to follow those clues before the crowd wakes up to them. You can't force a trend into existence. You can't will a breakout to keep running. You can't beg a reversal to form just because you're holding a losing position. The market never pays you for wishing. It pays you for alignment with price, with psychology, with momentum, with demand and supply. Your job is simple, though not easy. Find the direction that the market naturally leans toward, and move in that direction before the herd realizes what's happening. But to do that, you must first understand this simple truth. Price action is the purest form of market communication. Every candle, every tick, every hesitation reflects the collective psychology of thousands or millions of participants. Price is the final vote of the market. You can argue with it, but it won't argue back. It will simply punish you. When I studied the tape in bucket shops, I wasn't reading numbers. I was reading emotions. I was watching how buyers behaved when price dipped. I was watching how sellers reacted when price surged. I was looking for consistency, conviction, hesitation, exhaustion. These things didn't appear as words. They appeared in the behavior of price. That same behavior exists on your charts today. The line of least resistance is discovered by watching how price behaves around obstacles, previous highs, prior lows, trend lines, fair value zones, consolidations. If price meets resistance and stalls, you don't have to guess. The market is telling you it is not ready. If price slices through a level effortlessly, that's not an accident. That's pressure building for hours, days, sometimes weeks. Traders often react too late because they're too focused on prediction instead of behavior. You can't predict the future, but you can detect the direction in which effort is weakest. If price keeps making higher lows, the market is showing you that every decline is met with demand. If rallies grow smaller and smaller, the market is showing you the buyers are running out of breath. To ignore these clues is to trade blindfolded. Sometimes I would sit on the sidelines for days, watching the market drift, waiting for a level to break or hold. Impatience was my enemy, but I learned that forcing a trade was always more expensive than missing one. The line of least resistance reveals itself not through speed but through clarity. When the market is ready to move, it makes movement easy. When it is not ready, it creates friction, noise, whiplash, confusion. The amateur trader believes confusion is a challenge to overcome. The professional trader sees confusion as a sign to step back. Most people lose money because they trade during the moments when the market is undecided. They assume that a small candle means reversal or continuation. They assume that every pullback is an entry. They assume that a spike means a trend. They assume too much, too early. They rush because patience feels like wasted time. But patience is the filter that removes bad trades. When the market shows you the line of least resistance, the move unfolds smoothly. Breakouts run with conviction. Pullbacks are shallow. Volume supports direction. retests hold, structure aligns. It feels clean not because it's easy, but because it's logical. One of the most expensive lessons I learned was that the market doesn't reverse simply because it has reached a high price or a low price. Price doesn't turn because it looks extended to you or feels overbought or oversold. The market reverses only when the balance between supply and demand shifts, and that shift is always visible to those who look for it. Before a major uptrend begins, price stops making lower lows. But more importantly, it stops reacting to bad news. You will see the bears try again and again to push price lower, but the market refuses to follow them. That is the moment when the line of least resistance starts to tilt upward, not when indicators cross, not when a textbook pattern forms, but when the market's behavior changes. Before a major decline, you will see rallies fail. You will see buyers attempt to push price upward, but fail to make new highs or sustain momentum. The market stops reacting to good news. The enthusiasm disappears. Volume dries up on rallies and increases on drops. That is the moment when the line of least resistance turns downward. These shifts never lie. They can be ignored, misunderstood, or fought against, but they are always true. I learned that the hard way. Every time I thought I was smarter than the market, I paid for the privilege. The market teaches with losses first. The tuition is high, but the lessons are permanent. The line of least resistance becomes clear when you stop trying to outthink the market and start trying to observe it. If you can remove bias, ego, and the need to be right, the market becomes almost transparent. It tells you everything you need if you're willing to listen. Most traders fail because they skip the listening part. They jump straight into action. They want excitement. They crave movement. But successful trading is rooted in boredom, not excitement. The dramatic moves come only after hours or days of quiet pressure building beneath the surface. If you learn to recognize that pressure, you can position yourself before the explosion. Consider how a coil behaves. When compressed, it stores energy. The moment resistance gives way, it releases that energy with force. Markets behave the same way. Consolidation is compression. Breakouts are release. The mistake traders make is assuming every compression leads to the same release. It doesn't. The direction of the release tells you everything. The speed of the release tells you even more. If price hesitates, stutters, or instantly reverses, the line of least resistance isn't ready. Wait. When price breaks cleanly, holds above the breakout level, and continues with confidence, that is the market saying, "Here is the path. Follow it." My biggest wins always came from waiting for that clarity. Not from taking every small fluctuation, but from focusing on the major movements that aligned with the path of least resistance. When the market was rising, I bought. When it was falling, I sold. When it was confused, I stayed out. The market rewards alignment, not prediction. You must understand that. Prediction is ego. Alignment is discipline. Prediction tells the market what it must do. Alignment listens to what the market is doing. Prediction blinds you to reality. Alignment illuminates it. If you watch price long enough, you will notice this truth. The market always telegraphs its intention before making its decisive move. It may not speak loudly, but it speaks consistently. The question is whether you are patient enough to hear it. Stop forcing trades. Stop seeking excitement. Stop chasing tops and bottoms. Stop trading every movement. Start studying behavior. Start watching reaction instead of action. Start identifying the path that requires the least effort from the market. Because that is the direction money will flow. If you learn to follow that flow, you won't need to predict. You will simply align yourself with the pressure that is already building. That's where the real money is made. The most defining characteristic of the market's direction is not price, it's pressure. Price is only the evidence. Pressure is the cause. Every market move stems from an imbalance between buyers and sellers, and that imbalance is always building before it becomes visible on the chart. The key to reading the line of least resistance is learning to detect that pressure while it's still subtle, before the crowd sees it, before indicators confirm it, before the breakout or breakdown becomes obvious. Pressure reveals itself in behavior. When buyers are quietly absorbing every dip, You may not see a dramatic move yet, but you see the hesitation in selling. You see the wick rejections. You see the failed breakdowns. You see the shrinking size of bearish candles. You see the way price returns to a level repeatedly, as if checking its strength. This is not noise. This is a conversion of supply into demand. The market is preparing for an upward move, even if the chart looks flat. Likewise, when sellers are in control, you see rallies weaken. You see buyers push price higher but with less conviction. You see tall wicks on top of candles, small-bodied candles on attempts to rise, and larger candles on declines. You see levels hold firmly when price tries to break them. This is the telltale sign of supply overwhelming demand. The market is leaning downward, even if the chart hasn't dropped yet. This is the foundation of the line of least resistance, the direction in which the market moves with the least opposition. When the resistance is light on the upside, price rises with ease. When the resistance is light on the downside, price falls with speed. Most traders misinterpret what makes a strong trend. They think strong trends are defined by volatility, but strength is not chaos. Strength is consistency. A trend that barely pulls back is far more powerful than one that spikes violently. A gentle, steady rise with controlled pullbacks shows that buyers are dominant. A series of sharp, abrupt moves shows indecision. You must learn to value consistency over excitement. The market rewards consistency. The fastest money I ever made came when I traded with the line of least resistance. The fastest losses I ever suffered came when I traded against it. Fighting the market is not bravery, it is stubbornness. It is expensive stubbornness, and the market charges you interest every minute you stay in denial. Once, I sat on a large position believing a reversal was due. Every sign told me the market wanted to go lower, but I had already formed an opinion. My mind refused to accept the evidence in front of me. Instead of selling, I added to the losing position. I justified every drop as just another shakeout. The market fulfilled its intention, not my hopes. I learned again that the market does not care about your reasoning, only your risk. I discovered that losing trades don't destroy traders, stubborn trades do. A small loss is a lesson, a large loss is a consequence, a stubborn loss is a punishment, and that punishment is always self-inflicted. That's why you must study the line of least resistance before every trade. Ask yourself, in which direction does price struggle the least? That is where your focus should be. That is where your trades should be positioned. That is where your profits will come from. When price moves in the direction of least resistance, everything aligns. Rallies act differently, declines act differently. The tape feels different. A strong trend has a rhythm to it, one you can learn to recognize. You'll notice clean moves followed by shallow pullbacks. You'll notice slow volume dips and high volume pushes. You'll feel the market breathing in a particular direction. And once you've developed that sensitivity, you'll wonder how you ever traded without it. You'll also learn that the line of least resistance shifts. A market can move upward for days, but if demand weakens, the line flattens. If supply begins appearing consistently, it turns downward. A trader who refuses to adapt is a trader who will pay dearly. The market doesn't turn because you're tired of waiting. The market doesn't reverse because you want to take profits. The market doesn't stop trending because you think it's gone too far. The market stops trending when the pressure changes. That's why it's critical to stay objective. One of the biggest challenges in trading is separating what you want from what the market is showing you. Traders often hold on to bias because letting go feels like admitting defeat, but the market doesn't care about your pride. The quicker you drop your bias, the faster you align with the emerging trend. Every major move I ever caught involved this sequence. Observe the behavior, confirm the shift in pressure, align with the direction of least resistance, and sit tight. The sitting tight part was always the most difficult. Most traders can identify a trend, few can stay with it. Fear whispers sell too early, greed whispers hold too long, impatience pushes you into noise, and overconfidence convinces you that you can outsmart the market. But the truth is simple. The market rewards discipline, not intelligence. A disciplined trader with a mediocre strategy will outperform a genius without discipline. Because discipline allows you to follow the line of least resistance without hesitation, without fear, without the need for prediction. Many traders assume that identifying the line of least resistance requires complex analysis, but that's not true. It requires clarity, not complexity. It requires watching how price reacts to key levels. It requires studying how the market behaves under pressure. It requires understanding momentum not as a concept, but as a behavior. Before the market makes its decisive move, there's always a moment where the pressure becomes visible. You see price squeezing into a tighter range. You see failed attempts to break in one direction. You see successful attempts in the other. You see higher lows forming. You see lower highs forming. You see the balance shifting from one side to another. That shift is the earliest signal of the line of least resistance changing direction. Catching that shift early is what makes a trader truly profitable, not catching tops or bottoms, but catching the birth of momentum. People say the trend is your friend, but most traders treat trends like strangers. They don't trust them. They abandon them at the first sign of trouble. They doubt them because they fear giving back profit. But if you learn to trust the line of least resistance, the trend becomes more than your friend. It becomes your income. Every great move begins quietly. The crowd never notices the first signs. They arrive late, loud, and emotional. They buy the top. They short the bottom. They react instead of anticipate. But if you study price and psychology, you can position yourself long before the herd arrives. The most valuable tool a trader has is not an indicator, it's observation. The second most valuable tool is patience. And the third is courage, the courage to act when the market finally reveals the path it has been preparing. Courage doesn't mean taking reckless trades. Courage means taking the right trade when it appears, even if fear tells you to wait. Courage means staying with the trend when impatience tells you to take profit. Courage means exiting a losing position when ego tells you to hold. The line of least resistance is not just a concept, it's a discipline. You must train your mind to see where the market wants to go. You must train your emotions to accept when the market wants to go against you. You must train your patience to wait for clarity. There is a point in every trend where the move becomes inevitable. You can feel it. The market moves with confidence. Dips are bought immediately. Rallies unfold with strength. Every attempt to fight the trend is crushed. You're no longer guessing, you're simply participating in a move that the market already intended. This is where the largest profits are made, not from prediction, but from alignment. Never forget that the market is always right. It may move irrationally, it may move painfully, but it always moves truthfully. It reveals the truth in price. Price does not lie. The trader's interpretation lies. The trader's ego lies. The trader's fear lies. But price is honest. If you learn to read it without emotion, the truth becomes obvious. Before every trade, ask yourself, in which direction is the market experiencing the least friction? Where does price naturally drift? Which side fails repeatedly? Which side succeeds repeatedly? Where does the pressure build? Where does the pressure release? These questions will reveal the line of least resistance, and once you have that answer, your job is simple. Follow it with discipline, not with hope, not with ego, not with excitement, with discipline. The trader who follows the line of least resistance doesn't need to predict the future. The market reveals it, not through magic, not through guessing, but through behavior. And behavior is the most reliable indicator ever created. If you internalize this, your trading will change forever. You'll stop fighting the market, you'll stop chasing noise, you'll stop trying to pick tops and bottoms. Instead, you'll learn to ride the waves the market naturally creates. You'll learn to move with force when force is visible and step aside when confusion takes over. Your job is not to conquer the market. Your job is to understand it. And once you understand the line of least resistance, the path to profitability becomes clearer than you ever imagined.